Sanjay Nath, the co-founder and managing partner of Blume Ventures, is with us in our studios. Good to have you. Thanks so much for joining in. Clearly surpassing what we saw in 2018, the kind of deals that we've seen for the PE and VC space. So things are looking good at this juncture.
The last decade and the last year was about, in a sense, building the engine. So it's looking good, but we have a long way to go. So this year we've really got to deliver on exits, on scale, and do more of the same, but in a more stringent and a more careful way.
And that's exactly the point, Sanjay, that I wanted to come to. Because even globally, if you think that funding is not the problem, but the profitability is now a question mark. Maybe earlier, all the private equity world did not worry about that, but I think the WeWork disaster has sort of, pushed everyone to say, where is the money, right? In this kind of a macro environment, are you finding it that there is greater focus on profitability and returns as opposed to just pumping in money into new ventures, incubators, what have you?
Absolutely. I mean, if you go back to the essential fundamentals, the whole motive of a business is to generate profits, right, and to build profitable businesses. In fact, if you look at it, when we started Blume in 2010, 2011, the growth capital was quite dry in India, right? You just had a few Series A VCs, and the good part about that is that at some point you have to become profitable. When you have a lot of growth capital come in, and you have the likes of SoftBanks and the others, in one sense, quote unquote, doling out cash. The founder and then the board has to be tremendously disciplined, saying that that is not the end goal. The end goal is actually to build something that's really sustainable, that's a winner, but absent of capital. So I think in one sense, we're coming back to fundamentals. We've always been about fundamentals. My partner Karthik has written a long series of IPO blogs. And essentially, that's what we are driving our founders to do, right? To build profitable businesses that are positive unit economics and eventually will scale and go public, whether it's in India or on the NASDAQ or wherever else.
But is profitability a challenge in the current macro environment, given the slowdown?
So, one of the challenges also that there's been so much capital. So what happens is that when you have a lot of well-funded competitors, you quote unquote throw capital away, right? And if you didn't have that, you would actually build, just for example, let's say you are Ola, or in our case, we are a Dunzo, you could become profitable in a city first, achieve positive unit economics and then expand versus let's say just skim the surface and build right across. If you ask people about Blume, our founders are fighters. They basically build this in the in the face of adversity, right? So in one sense, one shouldn't think about competition, but you've got to just make sure that the ecosystem is not characterized by excesses of capital, right? So I think what's happened. I think Mukesh yesterday wrote a couple of articles which I liked, and he said, never let a crisis go to waste. And what I like about that is, in one sense, this funding crisis at the late stage is actually positive, because it's in the boardrooms, we're actually telling our founders to pull their socks up and really build something sustainably.
If I look at the trend, the global trend is that big companies have become mega companies. In the startup space so far, there is no evidence of that. Startups are mushrooming. Funding at a seed level, at an entry level is still not a problem. But if globally, and even in India, listed space in India, a few NBFCs have survived, 2 aviation companies have survived. Out of 12, you only have 3 telecom companies. Even that, we don't know whether the third will survive. My question to you is the following, which is that in the startup space, when will you see that migration, where only few companies will be able to gain funding, market share, and mind share?
Yeah, it's already happening, and I'll break this up with a couple of nuances. So if you look at Byju's, which we are not an investor in, I just saw that Byju's reported a profit finally, even after raising all this. Now, the reason that's important is the minute you become profitable, you technically can go public, right? Because that's a big requirement here. Now, if you look at the B2B side or the other side, the reason many of these companies sometimes are either US structured or Singapore structured, and they sometimes want to go public or get acquired abroad, is because they are not profitable, right, in one sense. Now, again, coming back to profitability, that becomes important, because the minute you are, the IPO window opens up. And I think that's what we need. We've got a lot of paper-funded unicorns and decagons on paper that have created value, in terms of shareholder wealth and in terms of brand, in terms of all of us use the Swiggies and the Zomatos. But the minute you become profitable, the capital markets open up, and that's what's needed. But if you look at your point is partly true, but I will say if you look at the likes of Freshworks, if you look at the likes of Dhruva, you go to a large conference like a Salesforce.com, And they've heard of these companies there, right? Silicon Valley investors have. So these Indian unicorns, in a sense, have become global. Even here, Byju's, our own, of course, they're a little smaller, but they're all becoming leaders in InsurTech, like Turtlemint. Dunzo is extremely well known in Bangalore. But I think the minute they they get into that profitability mode and actually become profitable on a unit basis, the capital markets open up. And that's what we want our founders to drive to.
Food is the most, that's the India romance. A throbbing middle class, we are consuming more, our per capita spend is increasing. I had a palate only for chola bhatura when I came to Mumbai. Trust me. But me and my son, we enjoy sushis now. That's India. We've traveled and we've evolved a bit more. Food is where a lot of startup money is moving. But food is where the competition is always there, and food is where you have the Nestle's and the Nestle's and perhaps the HULs of the world. You have a food startup investment, Pesca Fresh. I think it's into meat and it's into seafood.
Pesca Fresh, yeah.
Pesca Fresh, right?
Consumer.
Seafood, yeah. Yeah.
What is your view on the food startup business in India?
Sure.
And the cash burn also.
Yeah. So, Pesca Fresh is actually from our first fund. And I think, lots of these startups, when the challenge is always, can you keep the same level of quality as you scale? So I know the customers who rave by them, especially in Bombay, love them. But for whatever reasons, they've not been able to scale, pan-India. Food is great because all of us, I think Indians, we love to eat and we eat often. And also infrastructure, there's a big divide between the digital and the physical infrastructure. Yeah. Jio has, made the digital infrastructure seamless. It's transformed it. And the lack in physical infrastructure is a great boon for food because you can be wherever you are and you get it delivered. It is very competitive. I think if you look at the fintech side, right? See, essentially, this is the same customer who's eating, who's then transacting, who's going to Paytm or who's booking Ola cab. So I think if you have, I'm not saying you do it all, but I think we're seeing. I remember a quote. We were traveling on the DVN network to South America, and we were actually visiting Mercado Libre, which is their equivalent of Flipkart. And they started as a marketplace, they became a payment wallet, and today they've become a full stack fintech platform. And the reason I mention that is it's great to dominate in a certain category, but eventually I think the reason you see fintech really taking off is you see the same customers who are maybe ordering from you, but there are so many other services that you can launch to them. So food will be interesting. I mean, we were a small investor in Zomato through our acquisition through Runner. And I think both these founders are actually really good, both Debinder and Harsha at Swiggy. And, in a hyper-competitive space, building a really interesting brand.
Which, to your mind, and again, you may be an investor, you may not be an investor, but since you are active in that space, I'm curious to understand that what would be the big listing or the big startup business which in next 2 or 3 years will be the big one which we would be talking about? For example, DMart changed the way how we value retail in India. Yeah. Uber has really got valuations scare among startup community. Which is that one company in the startup space which you think will be the outlier for this decade?
Sure. I'll give you 2 examples. I'll give you 2 companies. One.
Give us local examples, not global.
Got it. Yeah. So if you look at Ola, we were actually shareholders in Ola through Taxi for Sure, right? This was from the first fund. And we acquired Ola stock. I think what is interesting is that Bhavish has been a fighter. I mean, if you think about Uber coming into India and somebody fighting against that, innovating with things like Ola Play, now Ola Electric, and of course we have some ancillary competing plays in that space. But I just look at Bhavish as a founder because we know him. It's really interesting to compete in the face of Uber, and I think they have a lot of loyal customers. So it would be wonderful to see them scale, maybe raise, go public. Now, I'm not sure where they would do that. They'll probably whether they'll do that India or outside, but they're definitely an India example.
So where will the biggest disruption come in? Would it be food, like you earlier mentioned?
No.
Where would it be?
So I'm going to move a slide. I'll just shift sort of segments. We believe that the largest beneficiaries of new tech is actually the old economy. So if you think of old industries like, let's say, warehouses, automotive, factories, right? Whether you have shop floor automation or you have a grey-orange robotics, they're actually juniors from BITS Pilani. They developed India's first humanoid robot. And they actually have these robots that move across the shop floor and automate that. They save warehouse costs. Now, if you think about that, it's so scalable, right? Because that actually combines labor and automation, takes it to another level. So people think of new tech is impacting just the new economy. We're sitting here in Mumbai, you happen to be a customer of Pesca Fresh. That's not really the all of India.
Yeah.
So we're actually big fans. We feel that it's the India 2 and India 3 agri-tech, let's say where rural meets fintech, or things like the old economy, which are actually going to be the biggest beneficiary. So that requires a lot of investment, but it also requires a lot of work, because it's not just downloading an app, and I think that'll be
training how to use
and that can help us compete with China too, right? If you think about it, because automation, AI, ML, we're huge fans of that.
And the regulatory environment is conducive right now, according to you.
So it's interesting, on the VC and PE side, the IVCA is doing a really good job. We're quite involved with it. At the IVCA summit in Goa that we had, Shri Piyush Goyal actually dialed in because he couldn't join us in person. And it was, I'm repeating the words, but it is really a listening government.
Okay.
In the sense they were actually government representatives along with us, along with leading PE and VC folks. One of our partners, Ashish, is very closely involved in that. And I think it's important because whether it is angel tax or tax parity for listed or unlisted shares, we need a lot of support and positive reforms from the government also.
Well, lovely to interact with you. Well, it was the first time on ET now, so thank you for joining us, and we look forward to much more engagements with you in the near future.
Thank you.
Your first television interaction also, right?
Yeah.
Great.
I think Karthik's done one with Abba, but yeah.
Good. Thanks so much for dropping by to our studio.